Hey everyone, and welcome back to Investing Talk Podcast. Ever feel like the stock market is just a total roller coaster?
Oh, tell me about it.
Well, this week we're strapping in and taking a look at a company that has been on a wild ride, WW International.
Ticker symbol WW.
You might know them better as Weight Watchers. Their Q4 2024 earnings report had some surprises,
Definitely.
and we're going to break down what it all means for potential investors,
Mm-mm.
especially given the current market.
Yeah, things are a little rocky right now.
It really is a little crazy out there.
The BDW's earnings report definitely left investors with some head scratchers.
For sure.
They beat revenue estimates, bringing in $184.4 million
Wow.
compared to the expected $173.23 million. They also exceeded earnings per share expectations, hitting 0.31 cents compared to the projected 0.06 cents. So pretty good, right?
Yeah, you would think so. But here's where things take a bit of a turn. They also reported a substantial net loss of $345.7 million. So what's going on here? Is this a reason to panic and sell?
Not necessarily. A big chunk of that loss, about $293.2 million, comes from a non-cash impairment charge. Now, I know accounting terms can sound a little intimidating,
Yeah.
but an impairment charge basically means WW had to adjust the value of some of its assets because they might not generate as much revenue as initially projected.
So it's not like they literally lost a pile of cash, but it does signal some potential challenges that they're facing.
Exactly. This impairment charge gives us a peek into some of the longer-term difficulties WW has been navigating.
And of course, this news sent their stock price on a little bit of a roller coaster ride as well. Initially jumped over 46% in after-hours trading, but then settled down, closing the day up just over 10%. Investors clearly have mixed feelings.
That's understandable. When you look at their earnings report, you see this push and pull between positive and negative factors. To really grasp what's happening, we need to examine the underlying trends driving WW's business.
Okay, let's dive into that. One of the bright spots is their clinical subscription revenue, which is connected to their telehealth weight management programs. It's absolutely booming, up almost 58%.
That's right. Their partnership with Sequence, a telehealth platform, is a major driver of this growth. But this surge in telehealth isn't just a WW phenomenon. We're seeing this trend across the healthcare landscape, with people becoming increasingly comfortable using digital solutions, especially for weight management.
This makes sense considering the rising popularity of GLP-1 drugs like Ozempic for weight loss. It seems like people are more open than ever to seeking different weight management options, including those offered through telehealth. This seems like a great opportunity for WW, wouldn't you say?
It certainly positions them well within a rapidly growing market. But there's a catch. While their clinical subscriptions are soaring, overall subscriptions are down over 7%. People are switching from the workshops plus digital option to the cheaper digital one. Plus, they're struggling to attract new subscribers to their traditional behavioral weight loss program.
And CEO Felicia Hudson even acknowledged this challenge, commenting that the data is not good regarding semaglutide supply stabilization. Semaglutide, the active ingredient in drugs like Ozempic, is currently facing supply issues. This raises questions about WW's future growth strategy. If they're banking on telehealth, and that's reliant on a drug with supply problems, where does that leave them?
It definitely adds a layer of complexity. So while the telehealth boom is a positive for their clinical side, they're facing challenges with their traditional programs. And grappling with potential limitations in the GLP-1 market, it's a delicate balancing act.
It seems like WW is stuck between a rock and a hard place. They're trying to capitalize on the telehealth boom, but their core business is struggling, and there's uncertainty surrounding the GLP-1 market.
Exactly. And to complicate things further, we need to look at the bigger picture, the overall market performance, which hasn't exactly been stellar lately.
Yeah, the Dow, the S&P 500, and the Nasdaq all ended February in the red. Not exactly a party on Wall Street. Trump's tariff threats are causing jitters. Inflation concerns are lingering. And there's a shift happening, with investors moving away from growth stocks towards more stable value stocks. Where does WW fit into all of this?
That's the million-dollar question, isn't it? Could the shift toward value stocks actually work in WW's favor? Given that its stock is trading near its all-time low, we'll dig into that right after this. So we were discussing whether this market shift toward value stocks could benefit WW.
Right. Is it possible that this actually presents an opportunity for a company like WW? Especially since their stock is trading so low right now, it's almost like they're on sale.
That's the line of thinking some investors might have. Remember, value investors are looking for companies they believe are undervalued by the market, companies with solid fundamentals, but perhaps facing temporary challenges. WW trading near its all-time low might catch their eye.
Especially when you consider that analysts are predicting the global weight loss market could hit a staggering $405 billion by 2030. Wow. If WW could capture even a fraction of that market, the potential upside is huge.
That's the bull case for sure. But we also need to consider the competition in the weight loss industry. It's a crowded space. And WW is facing pressure not just from traditional players, but also from newer digital-first companies like Noom.
And then there's the looming question of the GLP-1 market. If and when those supply issues resolve, could that significantly impact WW's telehealth strategy? Will people still need WW if these medications are readily available?
That's a key question investors are grappling with. The effectiveness of GLP-1 drugs is undeniable, and their accessibility is likely to increase. This raises the question, can WW position itself as a complementary service, perhaps focusing on long-term behavioral change and weight maintenance, even for those using medication?
Okay, so we've got this complex interplay of earnings surprises. The telehealth boom subscriber challenges fierce competition and the evolving GLP-1 landscape. It's enough to make your head spin, but we also need to look at what the charts are telling us, right? It's time for some technical analysis.
Exactly. Let's dive into the technicals. As of March 2nd, 2025, WW is trading around 66 cents per share, which, as we mentioned, is near its 52-week low.
Ouch. That doesn't sound too promising. And I know there are some technical indicators that might be flashing warning signs as well, right? Things like the 50-day and 200-day moving averages.
Right. WW is currently trading below both of those averages, which suggests a bearish trend in the short term. For those unfamiliar, moving averages help smooth out price fluctuations and highlight the overall trend direction. When a stock dips below these averages, it can be a signal for caution.
So not the most encouraging sign.
Yeah.
But there was something about the RSI, the Relative Strength Index, being in oversold territory, right? Does that offer a glimmer of hope?
The RSI is a momentum indicator. That measures the magnitude of recent price changes to gauge whether a stock is overbought or oversold. And right now, WW's RSI is at 22, which is deep into oversold territory. Typically, an RSI below 30 suggests that a stock has been sold off too aggressively and might be poised for a bounce back.
Okay, so that sounds potentially positive, but I imagine we can't just rely on one indicator in isolation.
Absolutely not. While an oversold RSI can signal a potential buying opportunity, it's crucial to consider everything we've discussed: the earnings, subscriber trends, competitive landscape, and the overall market sentiment. All these factors paint a more complete picture.
So given all this information, what does it mean for someone considering investing in WW? What's the investment strategy here? Is WW a buy, a hold, or a sell?
Before I answer that, I have to give the standard disclaimer. This is not financial advice. Investing always involves risk. And you should always do your own research and consult with a financial professional before making any investment decisions.
Of course. We're here to provide information and different perspectives, not tell you what to do with your money.
Right. With that said, let's look at WW through an investor's lens. If you're looking for a sure thing, a guaranteed slam dunk investment, WW is probably not it. There's a lot of uncertainty surrounding the company right now.
But for those who are comfortable with a bit more risk, could there be potential rewards as well?
Certainly. For investors who are comfortable with a higher risk tolerance and a longer-term outlook, WW could present an intriguing speculative play. The stock is trading near its all-time low. The weight loss market is poised for significant growth. And there's a chance they can successfully navigate these challenges and capitalize on the opportunities ahead.
So it's a classic high-risk, high-reward situation.
Exactly. There's a scenario where WW could regain its footing, innovate, and become a dominant player in the expanding weight loss market. If that happens, early investors could see substantial returns.
But there's also the flip side. They could continue to struggle, lose market share, and see their stock price dwindle further.
That's the risk you take with any investment. So if you're considering WW, it's vital to stay informed. Watch for their next quarterly report. Keep tabs on the GLP-1 market and monitor overall market trends. These factors will provide valuable insight into WW's trajectory.
You know, thinking about all this makes me wonder, what would I do if I were the CEO of WW right now? They got some tough decisions to make.
I love that thought experiment. It really puts things into perspective. What do you think their next move should be?
Well, if I were wearing the CEO hat, I'd be laser focused on two things: differentiation and innovation.
Those are definitely buzzwords we hear a lot. But what do you mean in this context? What would that look like for WW?
On the differentiation front, they need to figure out what truly sets them apart from the competition. Why should someone choose WW over all the other weight loss options out there?
They need a crystal clear, compelling value proposition that resonates with potential customers. They need to answer the question, what makes WW unique?
Exactly. And I think part of that differentiation lies in leveraging their human element. They have decades of experience with behavioral coaching and community support. That's something those app-only competitors can't easily replicate.
That's a great point. There's a real power in human connection, especially when dealing with something as personal and challenging as weight loss. WW could really lean into that.
And then there's the innovation piece. They need to constantly evolve, adapt, and find new ways to meet the changing needs of their customers. Maybe that means incorporating cutting-edge technology, personalizing plans based on individual genetics or lifestyle factors, or forming strategic partnerships with other healthcare providers. They can't just rest on their laurels. The weight loss landscape is changing rapidly, and they need to change with it.
Absolutely. They need to be proactive, not reactive.
And speaking of being proactive, let's not forget about the wild card in all of this, the GLP-1 market.
Right, the elephant in the room. These drugs are incredibly effective, and they're only going to become more widely available and affordable.
So how does WW compete with that? It's a tough question. Do they try to integrate these drugs into their programs? Or do they position themselves as a complementary service, helping people maintain their weight loss even if they're on medication?
Tough questions indeed. And I wouldn't want to be in their shoes trying to figure out the answers. They're playing a complex game where the rules keep changing.
You know, situations like this that make investing so fascinating. There are so many factors to consider, so much uncertainty, and so many potential outcomes.
And that's why we love talking about it on Investing Talk podcast. It's never boring.
That's for sure. And on that note, we'd love to hear from you, our listeners. What are your thoughts on WW? Do you see them as a potential turnaround story, or are they headed for further decline? Leave us a comment and share your perspectives.
And if you enjoyed this episode on WW, don't forget to like and subscribe to make sure you don't miss future episodes of Investing Talk podcast.
Until next time, happy investing. It really is like they're at a crossroads, trying to figure out their place in this new world of weight loss.
Exactly. It's a classic example of how a company can have both tailwinds and headwinds simultaneously. The telehealth boom is a huge opportunity, but the rise of GLP-1 drugs and the shift in market dynamics present significant challenges.
So circling back to our imaginary CEO roleplay, if you were at the helm of WW, knowing everything we've just discussed, what would your top priorities be?
If I were calling the shots at WW, I think I'd be focusing on a two-pronged approach. First, double down on what makes them unique, that human touch.
Yeah, the community support and personalized coaching are assets they need to leverage.
Absolutely. They could really differentiate themselves by offering more personalized support, perhaps even integrating telehealth coaching with their traditional workshops. Imagine a program where you have access to both digital tools and regular check-ins with a real human coach, someone who can provide guidance and accountability.
I like that. It combines the convenience of technology with the personal touch that many people crave,
Right.
especially in the weight loss journey.
Right. And the second part of my strategy would be to embrace the GLP-1 revolution, not fight it.
So instead of viewing these drugs as a threat, see them as a potential partner.
Precisely. WW could offer programs specifically designed for people taking GLP-1 medications. Programs focused on building healthy habits, managing side effects, and ensuring long-term weight maintenance. They could even partner with telehealth platforms that prescribe these medications to offer a seamless, integrated experience.
That's a really interesting idea.
Huh.
It acknowledges the power of these new medications, but also emphasizes that medication alone might not be enough for everyone.
Exactly. It positions WW as a partner in your weight loss journey, whether you're using medication focusing on lifestyle changes or a combination of both.
It sounds like WW has a lot of work to do, but also a lot of potential to redefine itself in this evolving weight loss landscape.
Definitely. It'll be fascinating to see what path they choose and how they navigate these challenges. This is a company to watch, that's for sure.
Well, we've covered a lot of ground today on Investing Talk podcast. We've analyzed WW's recent earnings, explored the dynamics of the weight loss market, and even put on our imaginary CEO hats to strategize.
And as always, we encourage you to do your own research. Don't just take our word for it. Dig into the company's financials, read analyst reports, and stay informed about the latest developments in the weight loss industry.
Knowledge is power, especially when it comes to investing. And speaking of power, we'd love for you to share this episode with your friends and family who might be interested in WW or just in learning more about the investing world.
And please don't forget to subscribe to Investing Talk Podcast so you don't miss any of our future episodes. We've got some exciting guests and topics lined up, and we love bringing you these deep dives into the world of finance.
And if you have any thoughts or questions about WW or any other company you'd like us to cover, leave us a comment below. We love hearing from you. Until next time, happy investing.